All right, making a comeback here. Stocks are pretty close to positive. Tom White's here with me looking at RH. And Seth Basham joins us with earnings. And a stock that's been just destroyed, Seth. Shares up about 2% right now in RH. What's expected for earnings here?
Yeah, investor sentiment has definitely turned negative on this name, so expectations are low going into the print today after the market closes. From our perspective, we think that buy side is looking for in line to small beat on the top line and a potential miss on margins, with guidance for 2025 coming in at best in line with consensus forecasts.
Tariffs showing up in the margin at all?
Tariffs are a topic for sure as it relates to 2025, but this company is doing better than most other home furnishings retailers when it comes to shifting sourcing away from China. So they have limited exposure there. They expect to be fully out of China by the end of the second quarter of 25. And they have limited exposure to Mexico and Canada. So if there are reciprocal tariffs on some of the other Southeast Asian countries where they have a fair amount of sourcing exposure, that's a risk. But I think the bigger concern investors have is around the top line forecast in a recessionary environment and stock market swoon, with housing continuing to be flat to down.
You guys have got an outperform on it, but 350. Boy, that'd be a nice trade. It's looking kind of far away right now. But we were there as recently as late February. So it seems like sentiment has really gotten the better of this company rather than numbers. Did they give any updates or anything in the last month, Seth?
No, it's been completely quiet from the company. There have been some short reports out which have precipitated some of the downdraft in the stock, we think. There's also some concerns around the gross margin outlook, as the company is pretty heavy on inventory and has been running a lot of clearance sales. But from our perspective, we think the top line carries the day here, and we see more upside than downside risk there.
Okay, so you think that, it looks like that the market just got really aggressively bearish in this sort of on expectations. And if you think that they're not going to be in a terrible spot, I guess what about housing, though? How important is it to see that come to life a little bit, Seth? I mean, is there a connection there? How trackable is that correlation between furniture and housing for RH?
Yeah, housing is pretty important, especially luxury housing. And the stock market's performance tends to be a good indicator historically of the aspirational luxury consumer's ability and willingness to buy luxury furniture. So those things are definitely important, but those are more additive to the top line story here. The company has a lot of idiosyncratic drivers to boost top line performance in 25. And those are the full 80% changeover in the assortment, which is resonating really well based on our checks. And then secondly, they're accelerating gallery growth, which should also boost top line sales. So from those two angles, we think that there's more upside and downside risk to the top line. If we get housing actually growing and we get the stock market coming back, those would be additive. I'm
adding this one to my list as well, alongside the airlines to watch, because what a chart on the 5-year. This is the multi-year low. I don't know how much of a technician you are, Seth, but that certainly argues for your bull case.
Yeah, certainly not a technician, but we think the stock is undervalued. Our target price of $350 is based on $20 plus and EPS in 2026, which is a pretty nice discount relative to some other home furnishings retailers, especially considering the growth prospects for this name.
Okay, so you're not even giving it a super high bar to get across relative to its peers.
That's exactly right.
Well, all right. Sounds pretty good. Hope Tom's got a bullish trader. I'm throwing him out of the studio. Thanks, Seth. Appreciate that very much. What you got, Tom? Don't hit me with the...
Hey, we're going to
Don't sell a call spread.
Yeah, no, we're not going to sell a call vertical. You got to look at IV percentile rank, about 98% right now. So it's basically at the highest it's been over the last 52 weeks.
Yeah, I mean, I didn't realize RH fell off the map so hard.
And it was a good report on their last earnings, but then they gave some guidance.
Yeah.
Then you saw those consumer confidence and sentiment numbers start to crack a little bit.
Gapped up last earnings.
Yep. Option market pricing in about a plus or minus 15% move, $36 either way. And this is based on the fact that this stock only has an 18 million share float. It's one of the smallest floats out there for companies that we typically look at. So there's not a lot of, maybe depth to a lot of the markets. High price stock, bid-ask spreads are really wide. So I'm going with the don't be a hero type strategy, based on, Seth's $350 price target. Well, if it goes higher, you're going to still be okay, but I still want to give myself a cushion to the downside. So I looked at a short put vertical in here, but I went out to the April 17th monthly cycle. So 2 weeks to expiration on this one. Give myself a little bit of more duration in case we do get a sell-off. Where I'm going to sell the 305 or the 205 strike put, and then we're going to buy the 195 strike put. So a short $10 wide put vertical, collecting roughly about a $3 credit. That's what you can make on it, $300 per spread. With that 14% cushion back down to that 202 break even point. You got $700 on risk at this one. That's if it goes below 195. It's still neutral to bullish in stance, but you're taking advantage of that really high implied volatility going into this report. Don't be a hero. You're still bullish on this name. Hey, you're going to profit in 3 out of 4 scenarios on this one. You just don't want that massive move to the downside.
All right. Okay. Well, I guess technically it fits. You can stay for another trade.
You got to look at the IV. You got to look at duration. You've got to look at expected.
Look at Seth's price target though, 350.
Yeah.
And that's just taking back the sell-off that the market imposed on its. Look, also the technical situation. I mean, it seems like your trade selling the downside is like, very high probability.
Yeah.
Just from a technical perspective, that 5-year chart we had up is like bang, bang, bang. This thing doesn't go below $210 basically.
Yeah.
200 maybe.
Yeah.
So
202 is a
you got to stay up at 202.
Yep.
So I think that's a very high probability trade.
Yeah.
Now, this is you might kind of beat yourself up if it rips.
You could be more aggressive on this thing too. But if you want to buy a
stock or something,
if you buy a call vertical in here, you're paying a lot for it because IV is so high.
It's pumped up.
Yeah.
So I get that for sure.
Yeah.
All right. What else you got? Home Depot?
Home Depot, another one that they like. They've got no outperform on it. And this one doesn't have earnings until the end of May into early June. So giving myself a little bit of duration and being more aggressive on this one. If you think this thing's going to rebound, it's still pulled back about 17% from those all-time highs that we saw in November. So if you think this thing is going to go up, spring selling season, people fixing up their houses, their yards, this takes advantage of it. Going out to the May monthly cycle, so 44 days to expiration, we're going to buy a bullish call vertical, buy something slightly in the money on the 360 strike, and then against it, because I want to offset some of my costs, sell the 385 strike call. So a bullish $25 wide call vertical, you're paying roughly about an $11 debit, maybe a little bit higher than that. But if you pay that $11 debit, there's your risk, $1,100 per spread. That can expand to $25. Remember that. You can make $400 if you pay $11 on it, or $1,400 on that. Break even goes up to $371 over the next month and a half. That's less than 2% above the current share price, so you don't need a monster move. And just to get to the 385 strike call, which would be max profitability on this one, less than a 6% move to the upside. So it's bullish, it's directional, it gives you flexibility as far as closing it ahead of time in case you get that pop before expiration. But then also, you want to limit your risk on these trades because the stocks like this aren't immune to what's going on with the consumer, tariffs, everything else.
Okay. All right. Well, 2 bullish approaches here for 2 housing stocks. Home Depot also dropped off pretty hard, but then their earnings were right before it in mid-Feb. So that one may be a little bit more kind of earnings-driven, fundamental-driven. Just the fact that there was nothing from RH. And it went from $400 to $212.
Right.
I mean, that's the type of stuff that Edson was talking about, too, with us at the beginning of the show. Stuff is deeply on sale in this market that people don't even realize.
That's one thing. Their furniture is not deeply on sale. It's ridiculous, the pricing on RH stuff.
Worth every... No, I'm just kidding. Maybe it's not. I don't know.
Yep.
The blankets are nice. Very cozy stuff. Thanks, Tom, for the trades. Thanks, Seth Basham, for the bull case. All right. Didn't realize RH was such a fun one.